Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bhokre and now I am welcoming you on your own YouTube channel Ekeeda. Friends, if you are watching my video for first time, I request you to subscribe to our channel Ekeeda and also press bell icon for your latest notifications. Today we are going to learn for CA Intercourse Advanced Accounting, topic name Internal Reconstruction, question number 9, which is on your screen. Let's read the question. The following is the summarized balance sheet of Week Limited on 31st March 20x1. Equity shares of 100 each, amount is given 1 crore. So I can say 1 lakh equity shares of rupees 100 each are there. 12% cumulative preference shares 50 lakhs, amount is 100 rupees per share. Per share amount is 100. So I can say there must be 50,000 shares. 10% debentures of 100 each, trade payable are given, provision for tax, very short liability side is provided. Asset side we have a fixed asset, thereafter investment having a market value of 9.5 lakhs. You can notice book value is 10 lakhs. So if opportunity is there, I will write off those investment to 950. That means I will write off 50,000 from the investment if opportunity is there. I mean to say if there is sufficient balance in your capital reduction, we can write off this. Profit and loss account debit balance, our main target is to write off this. Following scheme of reorganization is sanctioned. All existing equity shares are reduced to rupees 40 each, so sacrifice is 60 rupees per share. All preference shares are reduced to rupees 60 each, so your sacrifice is 40 rupees per share. Whatever is sacrifice, we will transfer to our capital reduction account. The rate of interest on debenture is increased to 12%. Existing we are having 10% debentures, so I can say 10% will be debited and 12% will be credited. Exchange the same for fresh debentures of 70 each for every debenture they held by them. So I can say existing they were having 100 rupees ka debenture, in future they will have a debentures of face value of 70. In that way they also sacrifice 30 rupees, but one thing we have to understand that their interest rate will be increased from 10% to 12%. One of the creditor of the company to whom company owes 20 lakhs rupees decided to forego 40% of his claim. He says I don't want 40% of my claim, so 40% of 20 lakh comes to 8 lakhs. He is allotted 30,000 equity shares of rupees 40 each in full satisfaction of his claim. So if I say 30,000 into 40 comes to 12 lakhs exactly, I can say this creditor of rupees 20 lakhs is settled. Total trade payable 50 lakhs, out of that 20 lakhs were settled. Fixed assets are written down by 30%. So what is the fixed asset amount? Written down means capital reduction account is debited and fixed asset account is credited. Current assets are revalued at rupees 45 lakhs. Look at the current assets. Currently it is 1 crore. Revalued at 45 lakhs means it is reduced by 55 lakhs. So reduction in the current asset is also there. Taxation liability of company is settled at rupees 1,50,000. Settled means it is paid. Provision for tax account will be debited. Whatever amount is paid will be credited in the bank account. Let us see what is the existing provision. The existing provision is 1 lakh, but we have settled it at rupees 150. That means 50,000 will be debited to your capital reduction account. Investment to be brought to their market value. That means investments will be reduced by 50,000. It is decided to write off the debit balance of P&L account. That we have to do. Pass journal entries and show the balance sheet of the company after giving effect to the above. So friends, we are here with the solution. Now we have to just prepare journal entries and balance sheet after giving the effect. So let us prepare journal. Friends, we are ready with the journal. Now we have to record all the transactions one by one. Let us see the transactions. Balance sheet is given on this date. So your all entries will come on 31st March 20x1. First transaction, all existing equity shares are reduced to rupees 40. So we have to cancel 60 rupees from that. Let us pass the entry. Entry will be 100 rupees ka equity share debit to 40 rupees ka equity shares, and we will credit remaining amount to capital reduction. Let us pass the entry. Friends, you can notice I have recorded the entry. Equity share capital rupees 100 account debit, that is 1 lakh shares of rupees 100 each, 1 crore is debited. To equity share capital rupees 40 account, these are the new shares which will come in the balance sheet. 1 lakh into rupees 40, it comes to 40 lakhs. To capital reduction account is a balancing figure which is 60 lakhs, being equity shares reduced to rupees 40 each. Let us go with the next transaction. Second information, all preference shares are reduced to rupees 60 each. Same like equity shares, you will record the entry. Old preference shares will be debited of rupees 100 each and new preference shares will be created with 60. Obviously 40 will be shifted to capital reduction account. Let's pass the entry. Friends, you can notice the entry. 12% preference shares capital rupees 100 account debit, that is 50,000 shares into rupees 100, 50 lakhs. 2. 12% preference share capital rupees 60 account credit, that is 50,000 shares into 60 comes to 30 lakhs, and remaining amount we have credited to your capital reduction account. In this way we have completed second information. Let us go with the next. Information number 3 says that the rate of interest on debenture is increased to 12%. Debenture holders surrender their existing debentures of 100 each and exchange the same for the fresh debentures of 70 each for every debenture they held. So I can say old account debit to new account, old will be a 10% debit, credit will be for 12%. Importantly, existing debentures of 100 and new debentures of 70. So same like your equity and preferential, this entry also will be done. Let us pass the entry. Friends, you can notice my entry. 10% debentures of rupees 100 each debited, 40,000 debentures of 100 each, 40 lakhs debited. 12% debentures of 70, again 40,000 debentures, but now it will be of 70 each credited, and the difference we have transferred to capital reduction account 12 lakhs. Being interest rate of debentures raised to 12% and face value reduced to rupees 70 each. So we have changed interest rate as well as face value of the debenture. Let us see the next information. Next information is given, fourth information. One of the creator of company to whom company owes rupees 20 lakhs decided to forego, means he is ready to cancel 40% of his claim, that comes to 8 lakhs. He is allotted 30,000 equity shares of rupees 40 each in full satisfaction of his claim. So simply we are settling creditors of rupees 20 lakhs, and importantly creditors are the part and parcel of trade payable. So my entry will be trade payable account debit to the extent of 20 lakhs. The cancellation amount of 40% we will credit to the capital reduction account, and settlement amount of course we will credit to the equity share capital account. So let us record the entry. Friends, I am ready with my entry. Creditors account debit 20 lakhs to capital reduction account 40%, that is 8 lakhs. To equity share capital balancing figure 12 lakhs. If we are giving shares of rupees 40 each, we must be issuing them 30,000 equity shares of rupees 40 each. Being part settlement of creditors by issue of 30,000 equity shares of rupees 40 each. So in this way part settlement of creditors is done. Remaining creditors obviously will continue in your balance sheet. Let's see the next information. Fixed assets are written down by 30%, means cannot I say fixed asset account will be credited, it is a loss to the company which will be debited to your capital reduction account. 30% of this 1 crore 25 lakhs we will cancel. So your entry will be capital reduction account debit to fixed asset account. Let us record the entry. Friends, you can notice our entry capital reduction account debit to fixed asset account 37,50,000, which is 30% of 1 crore 25 lakhs. Being fixed assets written off by 30%. Let us see the next information. Current assets are to be revalued at rupees 45 lakhs. Look at the amount of current assets 1 crore. If revaluation is 45 lakhs, means cannot I say 55 lakhs is written off from your current assets. So your entry will be capital reduction account debit to current assets account. Friends, see the entry capital reduction account debit to current assets account. Revaluation is 45 lakhs, existing value was 1 crore. So how much amount is written off? Obviously 55 lakhs. So our entry is capital reduction account debit to current asset account. Being current assets revalued, next transaction we have to see now. The taxation liability of companies settled at rupees 1,50,000. Friends, you can notice in your balance sheet tax provision is 1 lakh. Let me disclose that. Your provision for tax is 1 lakh, but you settled this liability for 1,50,000, so you overspent 50,000. That will be debited to capital reduction account, and of course money goes out, so I will credit it to current account, that is your bank current account, I mean to say current assets. In this bank balance is already a part of current assets, so I will say my entry will be provision for tax account debit 1 lakh, capital reduction account debit 50,000 to bank account, or I can say current assets 1,50,000. So let us record the entry. So entry is provision for tax debit, as I said 1 lakh. Capital reduction account debit is a balancing figure. To bank account 1,50,000, being settlement of tax liability. Let us see the next transaction. Investment to be brought to their market value. Let us see the book value and market value both in the balance sheet. You can notice, students, your book value of the investment is 10 lakhs but market value is 950. Can I say they are reduced by 50,000? So investments will be credited and capital reduction account will be debited. Simple entry will be recorded. Capital reduction account debit to investment account. Amount will be 50,000. Let us record the entry. So entry is in front of you now. Capital reduction account debit to investment account. Book value was 10 lakhs but revised value is 950, so it is reduced by 50,000, being investment reduced to the market value. Let us see the next information. It is decided to write off debit balance of profit and loss account. So debit balance of P&L account will be written off, so it will be credited and debited to the capital reduction account. Friends, our entry is there. Capital reduction account debit to profit and loss account 6 lakhs, being debit balance of P&L account written off. Now friends, I need to see if there is any difference in your capital reduction account. If there is any difference, that will be transferred to capital reserve. So I have to prepare a small capital reduction account as a working. Friends, I am ready with the ruling of capital reduction account. Now here I will just post amount on debit or credit depending on our journal entries. So I am taking every amount from my journal. So I am just posting and thereafter I am coming back to you for your balancing figure. I am just posting the amounts now. Friends, we are ready with the capital reduction account. You can notice I have just posted the journal entries and I found that credit side is heavier by 50,000. This extra fund which is generated in the scheme will be transferred to the capital reserve because it is not your regular profit. But one more thing, I need to pass one more entry for this capital reduction account debit to capital reserve. So our last entry is to be recorded now. Friends, you can notice our last entry, capital reduction account debit to capital reserve. As per our working note, capital reserve is 50,000. Being surplus of the scheme transferred to capital reserve. In this way, we have completed our journal entry. Now I have to just draw the balance sheet of this company after reconstruction. Importantly, when I prepare the balance sheet after reconstruction, in the name of company, I need to add the word and reduced. Let us prepare the balance sheet, students. Friends, I have prepared this balance sheet format. Here, while preparing the balance sheet, we will follow one rule. If in particular heading, we have only one amount to write, I will not prepare a note for that. I will directly write down the amount, right? But exception is only share capital. Share capital, we have to prepare a note. So in this way, we will complete our balance sheet. So I am preparing the balance sheet. For share capital, I will surely prepare a note. Note number 1. B is reserves and surplus. We know that in our existing balance sheet there were no reserves, but while drawing the journal entries, we got the capital reserve of 50,000, which will be noted. Friends, look at the balance sheet. There were 10% debentures earlier. Now they are converted into 12% debentures, and with the help of entry, I am going to write this also as your non-current liability. Number 2 heading non-current liability, which will be a 12% debentures new. Here I am writing long-term borrowing 12% debenture. I will pick up the amount from our journal entry. Let me show you the entry. Friends, notice your entry number 3. Where we have recorded 12% new debentures, amount is 28 lakhs. I will place this amount directly from here, 28 lakhs. So in this way, we have completed our long-term borrowing. Let us see the next amount of your liability side. In our liability side, we have a next amount, trade payable, 50 lakhs. Out of that, 20 lakhs was settled with the information number 4. With the help of entry, we will record this also, and we will record your trade payable at rupees 30 lakhs. As we know, we have settled 20 lakhs. Let us show the entry. I will show you the entry now. Friends, notice your entry number 4, which says that 20 lakhs ka creditors are settled. Importantly, creditors are the part of trade payable. So your trade payable will be reduced by 20 lakhs and revised amount we will record in the balance sheet. I have written trade payable 30 lakhs. There is one more amount on liability side, tax provision, but I think it is settled. Let me show you that. You can notice tax provision was there 1 lakh, and we have recorded the entry for that. Entry number 7 is there, where we have debited tax provision account, so that account is also cancelled. It will not come in your new balance sheet. So that's it on your liability side. I will take a total of liability side, but yes, sorry, I can't take the total because a few amounts are still not there. I will keep a space blank for that. Friends, you can notice on your asset side we have a non-current assets where we have a fixed assets, and we know that fixed assets are reduced. Let us see that. Entry number 5 says that we reduced our fixed asset by 30%, so 37,50,000 is reduced from 1 crore 25 lakhs. Friends, my revised fixed assets are 87,50,000. Let us see the next amount to write. Next heading is investments. Book value was 10 lakhs but market value 950, and we know that they are revalued at market value 950. So I will write this market value as the investments value. Item number B, non-current investments in your non-current assets. So in this way I have recorded my non-current investments valued at a market value 9,50,000. Let us see the next. Friends, next amount is current assets 1 crore. We know that current assets are revalued at 45 lakhs. Thereafter some payment is made 1,50,000. A tax provision has been paid. So remaining current assets will appear in your balance sheet. So let us record that. Friends, here we have recorded our current assets 43,50,000. Because we paid tax, we have revalued. Therefore your closing balance become 43,50,000. Let us try to close the assets. Assets we can close and we can take the total. Friends, I have taken total of asset side. Now your mind will say, sir, take this amount here and take the balancing figure. That is not going to happen. We will prepare note number 1 for share capital. We are ready with the format. In share capital, first line we have to write authorized capital. In this example, authorized capital is not available, so I will put a question mark. Authorized we will write issued, subscribed and paid up. Friends, you can notice existing equity shares were 1 crore amount, but in terms of number of shares it was 1 lakh, and here we have recorded some entries. Let me show you those entries. Friends, you can notice your existing equity shares of 100 each converted into 1 lakh equity shares of 40 each. So these shares are there. Plus we have issued some shares to the creditors. Let us see that. Plus this 30,000. So we have 1,30,000 equity shares of rupees 40 each fully paid. Out of these 30,000, shares were issued for consideration other than cash. Friends, for preference shares also we have done the same kind of things. Let me show you that entry. Earlier your preference shares were 50,000 shares of rupees 100 each, and they are converted into 50,000 shares of rupees 60 each. So we have to record this new share capital, that is 50,000 12% preference shares of rupees 60 each. In balance sheet we are writing. Of the above, 30,000 equity shares were issued for consideration other than cash. 30,000 equity shares were issued for consideration other than cash. In this way we are ready with the share capital totaling to 82 lakhs. Friends, my total share capital is 82 lakhs. This I am going to place in my balance sheet, and after writing this I wish to take the total of liability side. I hope it will tally. Friends, our balance sheet is tallying at 1 crore 40 lakh 50,000. In this way, this simple question we have completed. Friends, in internal reconstruction topic, you don't have so much of varieties. Just take care of your subdivision of shares and like that. But this kind of examples will definitely not trouble to you. I have taught you to the extent possible. Still, if you have any doubts, please put in your comment box. We will try to resolve your queries at earliest. Thank you for watching this video. Before I close the video, I request you to share the video link with your friends so that they can also get the benefit. Thank you for watching the video, students. God bless you all. See you soon.